All right, so TCS numbers are out and profit after tax is at 12,075 crore versus the poll of ET Now, which was 12,573 crore. If you talk about revenue, that is come at 65,799 crore, and EBIT has been reported at 16,565 crore for the last quarter. And if you talk about margins, there is a slight improvement in the margins front. The margins have come in at 25.2%, whereas the expectation of ET Now poll was 25%. There is also a dividend which has been declared by the company of 11 rupees per share. But how are the earnings actually looking like prima facie? We have with us Aditya Shah to decode the same. Aditya, hi. What is your first reading of the numbers?
About as such, the margins have come in a bit better than expected at about 25.3%, if I am not wrong. The profit number is a little bit below estimate, but the profit margin continues to be really very good. We need to understand from the management about the future guidance and what is in store with respect to the H-1B visa as well. But on the first look, the results look really okay.
We also have with us Mansi to decode the numbers. Mansi, the bottom line is out. It is more or less in line what ET Now estimated. What is our reading of the numbers?
Absolutely, Ankur. As we see, the revenue is as per our expectations. We did expect an upsurge, and it is even above than our expectations. We were expecting around a 2.5% upsurge in the revenue. However, the number is posted at 65,799 crore. That's the revenue figure which we are seeing in. At the same time, if you see the profit figure, it has seen a dent. We were anyways expecting a dent of around 1.5%, but the revenue figure has seen a downtrend of around 5.7%, so clearly below our expectation. The margins are absolutely in line with what we were expecting at 25%, and that's what it was in the last quarter as well, and that is what were the expectations also. And if we talk about the EBIT at present, our expectation was 15,988 crore, and the EBIT figure which has been posted is at 16,565 crore. So it is again above our expectations. So all in all, in the revenue front, in the EBIT and the margin front, it is either above or in line to our expectation. However, the profit figure is below, and that is what we were expecting, but a little bit below than what we were expecting. It has also declared a second interim dividend of rupees 11 per equity share. So all in all, that's the TCS number, and we also have a market expert joining with us. Good afternoon to you. Thank you so much for giving your time to ET Now. Your first take on the TCS number is what we would want to know.
Yeah, is that question for me?
Yes. Good afternoon. Thanks for giving your time to ET Now.
Yeah. So, as I said, the results are stable. No negative surprises in the results per se. The company has been able to hold margins at about, I think, 25.1 to 25.2%, and also the revenue number is in line with what the market was really expecting. So, from my perspective, I was worried that the IT majors could throw a negative surprise in this quarter, but net there's no negative surprise per se. Now we need to understand the total deal wins that have happened, the quantum of deal wins, as well as what the companies are guiding for with respect to the business in the developed markets, as well as the H-1B visas and how are they going to tackle this in the future. So net stable numbers, no negative surprises for us.
Stable set of numbers, but what went wrong on the profit figure is what I would want to understand. We were anyways expecting a decline, let's say due to 1 month impact on wage hikes, talent investment, the lower utilization and constrained leverages, but the number is even lower than what our expectations were, a 5.5% downtrend on a quarter-on-quarter basis on the profit figure.
So wage hikes and severance packages is something that we need to watch out for. I have not looked at the exact profit and loss statements, but there has been some escalation in the cost for the companies per se. Where exactly has this been? Maybe it is below the EBIT number per se, because the EBIT margins continue to remain very stable. One-off wage expenses that the company had, that may have impacted the P&L statement. So we'll need to look at it in depth. But the EBIT margin has continued to remain stable, so that is positive. We need to understand from the management where this cost escalation has come from.
Aditya, stay with us because there are a few more numbers which are coming in. I can see that the total contract value, the TCV, has stood at $10 billion for Q2. Apart from that, if you talk about the cash flow from operations, that is 110% of the net income that has been declared by the company. So I want to know your first comment on the TCV numbers which has been released.
So I could not hear the TCV numbers. Can you repeat that again?
$10 billion is what our company has declared.
Okay. So the TCV number, from my perspective, looks okay. We need to understand how was the deal within the brackets per se. The number looks okay, but from my perspective, what I want to understand about number one is how is the traction within the North American market. That is something that is to be understood because there has been some slowdown within the US market, and what will happen going forward with respect to the H-1B visas and the tariffs coming in. So right now, from a looking back quarter perspective, the number looks okay.
Right. I will also take you through few of the numbers, the segment highlights which are there as per the industry domain. So BFSI sector, if you compare YOY growth, there is 1%. Consumer business growth has been declined around 3%. Apart from that, one outlier, I can see the regional market and others, there is a decline of 18.1%, which has been reported by the company. Similarly, communication and media, there is a decline of 5% in constant currency terms. And technology and services, there is a growth of around 3%. So all in all, if I talk about BFSI sector, there is 1% YOY growth, which I can see, Aditya.
Yeah, so the BFSI space, that is where the major growth generally would tend to come in, but that has not come in. As I said, the BFSI space within the developed market continues to remain a drag for the company. So from my perspective, we need to understand the future guidance of the company and how are they looking at this business going forward. That will drive the stock price first.
As the composition is concerned, the company says that India is YOY down 33% YOY, while Asia Pacific up 2%, Latin America 1.8%, there is an increase, and Europe there is a decline of 1.9%, and continental Europe minus 3% here as well. Total, if you talk about India and MEA, there is a decline I can see in India share as per the release which has been given by the company. So in terms of geographical location, the America continues to be the important business for the company despite whatever is happening. In fact, even in the last press conference, I remember the comments from management that US remains important for them. So what is your reading in terms of the growth by market numbers which has been released there, 1.8% increase in Latin America?
As I said, the US market continues to be one of the most important markets, not only for TCS, but for the entire IT sector per se. Tariffs, the H-1B visa fiasco, and the new H-1B visas costing a lot more for the company. That is a major concern for everybody across the entire IT sector. Growth has slowed down within the US market, and the future outlook will now determine how the stock price continues to behave after this result. So net future guidance from the management, as you know, the press conference has been cancelled. So future guidance, whenever they do hold an interaction with the analysts, will be really very important to take a decision on how the stock price will really move forward.
All right, we also have Piyush Pandey with us. So Adit, stay with us. Piyush, I want to come to you. The granular details are coming in for TCS numbers, and life sciences healthcare is up 3.4% QOQ in constant currency terms. Similarly, manufacturing also, there is an uptick of 1.6% in CMI, 0.8% QOQ as well. What is your first take on numbers, Mr. Pandey?
So if we exclude these restructuring charges, EBIT margin looks ahead of expectation. Also, I would say in terms of revenue growth, 0.8% QOQ and CC terms looks pretty much healthy and ahead of broad expectation. And so broadly in terms of TCV at $10 billion, something I would say looks good, and this will be, I'd say, liked by the street.
So, if you talk about the profit numbers, of course, there is a dent which is seen. What do you think could be the reasons for this decline?
See, restructuring. See, they also had this reported this restructuring charges, no, in Q2, like so that impacted the profit for this quarter. But if you exclude that, then EBIT margin and profit looks reasonably good. Yeah.
In terms of the geographical division which has been released by the company, which is done every quarter, as I was discussing earlier, US continues to be an important point, and that was even mentioned by the company earlier. But if you talk about India, there is a decline. Now, how should one read it?
So India declined primarily because the BSNL deal has got completely ramped down, no? So from this quarter itself, from Q2 onwards. So that led to, I would say, slightly dip in the India revenue, but it also led to higher margin because BSNL deal had a slightly lower margin, and so as that deal got ramped down, it led to positive improvement in the EBIT margin.
You mentioned about margins now as BSNL deal is completely implemented, and as you mentioned that there is benefit of margins here. Do you think the margins are peaking here, or in your reading, since BSNL impact is completely over now, this 25.2% EBIT margin, how do you read now?
The aspirational margin range for TCS has been 26 to 28%. And this is what they would like to achieve in the medium to long term. But having said that, the aim, in the current environment, the aim is to focus on growth while maintaining sort of stable margin. Like so, 24 to 25% is something which they can maintain in the near term, and focus is more on the growth and driving investments in the new age areas. Yeah.
We will wait for the management commentary to come and give us more clarity on why this growth is looking like in terms of the numbers which has been reported by the company. But for now, Aditya as well as Piyush, thank you so much for joining with your views on TCS.